Hi everyone, today let's take a quick look at the weekly jobless claims. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So weekly jobless claims came in a little bit higher than expected, and this gave markets a bit of a shot in the arm. They came in at 231,000, up 22,000 from the previous week, and this is the highest that we've seen since August of 23. So pretty substantially higher. And like I said, markets rallied on this information. This is tapping into that dual mandate from the Fed. Their job is to maintain price stability as well as full employment to the best of their ability. And this should give them some encouragement to lean towards those potential cuts and a softer landing. And again, this gave markets some room to the upside. We also saw non-farm payrolls come in a little bit light this month, only at 175,000, way below estimates of 240,000. So we are seeing some pretty significant softening in the labor market in April and now here in the start of May as well. Moving over to fear and greed, you can see we did rally here a little bit, up to a 44 on the indicator. You can see previous read 38, 44 here now. Stepping towards that neutral condition, we are right on the cusp. It seems like we're headed in that direction. You can see still greed on momentum, still extreme fear on strength, still regular fear on breadth. So still mixed indicators pretty much across the board. And you can see the VIX dipping all the way down to that critical zone. We've been talking about that for a while. Dipped all the way to that 12.7 area, and we'll look at that on the charts later. Safe haven demand rallying a little bit, still in fear. Junk bond demand still in regular greed. Moving over to seasonality, this has been a historically weak period. However, markets have really held up quite well. You can see we're still in this hold level. The dip is actually supposed to come into the Friday session. You can see slight rallies here, slight rallies on regular markets. We'll see if that dip comes into that Friday session. If it does, based on this, that's typically the bottom of markets are very close. See a slight rally, double bottom, and then a strong push into the end of the month. So far, this has not been super useful, but it is interesting to see. Moving over to the economic calendar, you can see 30-year bond came in a little bit under the previous read, so that's good. You can also see initial jobless claims way higher than expectations. You can also see the previous number was revised higher just slightly. And then Fed balance sheet came in $9 billion, not a big move there at all. And then looking at tomorrow, we do have Michigan inflation data. That'll be interesting, as well as Michigan consumer sentiment. And that'll wrap it up for the week. Moving over to Max Pain, stock price at 520, Max Pain at 513. Total options just over 800,000 now going into the end of the week. We talked about how the top of the puts is right in that 519, 520 area, and that is where we are. So you wouldn't expect too much more upside tomorrow based on Max Pain, but it seems like markets were pretty bullish going into the close. Put call ratio continues to go a little bit higher, 1.7, which should drive markets a little bit higher in my opinion. Moving over to the charts, the S&Ps actually went quite a bit higher here today. You can see we held that 55 EMA. We talked about that being super important here on the hourly chart. Almost tested it yesterday, did test it here in the pre-market, held that level and then rallied right through the next one and then hit that next trend line, next resistance 520.88. And you can see strong volume on the last hour of the day, which was a bullish candle. So everything looks good there. And then look at this daily chart, pushing through that trend line, technically closing above this next one on the daily, but you can see the hourly, we're right at it. Resistance, like I said, 520.88. And then above that, you have 524.23. So everything looks strong. Momentum on the daily, still bullish. RSI, still bullish. And we're back into overbought conditions. We did have a pullback in time, and we'll see what happens now. Last time we hit overbought, it did take at least one day to pull back. So maybe we get one more day of bullishness or just sideways choppy action at resistance. And then moving over to the Tasty charts, you can see we did push right through that resistance. We'd been watching these ATR stops at 517.97. Now we took those out. We did close above it. So we're back into bullish conditions on the daily chart. ATR stop is now down at 504.21. And it looks like we're headed to that upper ATR band that is currently at 526.10. Probably not going to get there tomorrow, but maybe within a day or two. But maybe within 2 to 3 trading days, we can get into that zone, and then we'll see what happens from there. Otherwise, looking at the 4-hour chart, you can see we hit that upper ATR, pull back in time. Now we're right at that upper ATR once again. That level is 520.61. That'll continue to trend up as we grind along that level, just like we did here. So should continue to trend a little bit higher. You can see weak momentum, but still price action is king. Trailing stop 515.54 on the 4-hour chart. And then looking at that hourly, you can see overbought conditions, pull back in time, actually touched the lower ATR there just for a moment, and then rallied right to that upper ATR 520.30. ATR stop on the hourly 517.71, but everything looks bullish, hitting those upper resistances, and this should continue to grind higher, at least for tomorrow's session in my opinion. Moving over to the NASDAQ, this one didn't look nearly as bullish. It did rally through the session and it did hold that 55 EMA, but you can see we did not break out of that next level. We're not grinding along that upper trend line the same way that we are on the SPY. It still looks good. It still was positive on the day, 0.22 to the upside, but it seems like we're finding a little bit of resistance at that 441.81 level. If it pushes above that, we should be in good shape, at least to that 443.90 area, 444, certainly possible. Momentum, again, seems to be in bullish conditions. Daily chart still in bullish conditions, but it doesn't seem to be showing the same kind of strength as the SPY. Moving over to the NASDAQ, moving over to the Tasty charts, you can see same thing here. We did take out those ATR stops. That was at 440.53. We closed above that level, so we're back into bullish conditions on the daily chart. ATR support is at 423.30. Upper ATR band on the daily 451.55. Again, that would be your current price target. Might find some resistance at these previous highs around 448.70, but that upper resistance, like I said, 451.27. We'll see what happens once we get into that zone, but we're back into bullish conditions. And then looking at the 4-hour chart, because we're not nearly as bullish as the SPY, we do have a little bit more room here. Upper ATR band is at that 444.33 level. ATR stop did roll up here just a little bit, 436.13. Again, momentum on the 4-hour still showing a little bit of weakness, but it was positive on the day, like I said, and you can see we're still above all the EMAs and SMAs on the 4-hour chart, so technically bullish conditions. And then looking at that hourly chart, same thesis here, continuing to be a pullback in time, still in bullish conditions. Support 438.13, and it was basically flat all day. Hit that second ATR as resistance, but still holding that 8 EMA at 440.86. So everything here still looks a little bit bullish. Upper ATR there at 442.50. Moving over to the Russell and the Dow, both of these looked very powerful on the day. We talked about how the Dow looked strong yesterday, and we did get a very powerful continuation there. The Russell did not look nearly as strong with that gap down. Did hold support, but then this rally here today, really aggressive, up over 1%, took out that 204.62 level, almost to the next one, 206.50. Momentum bullish, RSI still bullish, so both of these continue to look very strong, and the Russell back into those bullish conditions for me. And based on the ferocity of that move, you would think this could potentially push that 208 area. Let's go ahead and extend out this trend line here. That would be right in that same zone, 208.17 as a potential resistance in that area. And then looking at the Dow, taking out that 292.44 level. So for me, next resistance 298.76. Momentum and RSI bullish, and you can see strong volume on that. You would expect this to continue higher based on both of these charts, looking quite good. Moving over to stocks that moved here today, we got Lululemon going up 2.12%. You can see this has been a bit of a dumpster fire. They had terrible earnings and they continued to fall pretty aggressively. Eventually found some support in that 330 area, rallied back up to 368, and now we seem to be holding a higher low here. So we culminated on this move. See momentum was fading. We turned into bullish conditions, hit this trend line here, and then we've grinded along that for a little bit. We're right there again, but this seems like a higher low setup. Once this trend line breaks and starts to push, this could head back towards that 385 area, certainly possible. And then looking at Salesforce on a down day, 1.36%, similar chart but not as aggressive. You can see on earnings, big move down. Found support at 267.05. That was the support and the high here from 22 December. Again, momentum rolling to bullish. We're right at that downtrend line here. Tested that and then broke down from that level. So a bit of a fake out there. Still could hold a higher low. Again, want to see this hold this and then push, but at this point this does look quite bearish. If that 267 area breaks, then we could push down to this trend line around that 259.70 area. Moving over to the Mag 7, you can see it was actually down on the day, 0.44. Pretty unusual to see the Mag 7 down on a day where the major markets were up, but that is what we have here today. So we're still in this consolidation, waiting to see what this looks like. Let's look at this on the hourly chart here just for a moment. Nothing super convincing. Sideways choppy price action. Just trying to see if this was maybe a bull flag. It's not really. You can see we wicked the same lows as yesterday. Nothing really showing there. And then looking at that daily chart a little bit closer, you can see momentum did roll to the downside, so that's not great. Current support would be that 55 EMA at 349.91. So that would be a pretty decent move, about 2.5% lower from current price. And that step towards bearish momentum is definitely concerning, especially for the NASDAQ. Moving over to Apple and Tesla. Apple was up 1% today, so we continue to hold that level. We've been watching 182.37. We said as long as that zone holds, we're in good shape. Sure enough, it did here today, and we did go higher, and we're up after hours. Resistance would be 186.81. Momentum bullish, RSI not overbought yet. Everything still looks good here on Apple. They had a really powerful earnings, and that's kind of shifted the sentiment here on Apple. And then looking at Tesla, still a dumpster fire. We said once this trend line broke, we were expecting a lower move. Tried to bounce a little bit yesterday, even though it was a pretty bearish day overall. And then it was down another 1.5%, momentum rolling to bearish. At this point, I would expect this zone to break. Your next trend support would be down around that 155, 157 area. Depending on how aggressively this moves, it could go even lower than that. But right now, this looks bad on Tesla. Moving over to Microsoft and NVIDIA. So Microsoft was up 0.43. It's right at this trend line still as resistance. We've been here for a couple of days, still acting in this zone. 413.36 is still my resistance. Momentum and RSI are still bullish, but we want to see this break. If it's going to do it, that could be quite a powerful move. Potentially back into this previous consolidation, maybe even to the highs there at 430. That would be interesting. But right now, still at resistance. And then we have the worst performer of the Mag 7 here in NVIDIA. Definitely not what I would have expected to see. We had a really powerful day on Monday. Thought we were going to break and hold and push to this next level. But since then, we've had 3 bearish days in a row. We're right at the 9 EMA there, 881.84. It was down almost 2% on the day, and you can see momentum rolling to bearish here. That is not a great indicator. Could certainly see the rest of the market still hold up if NVIDIA is going down, but that is a major player headed to the downside. This looks quite bearish in my opinion. Moving over to staples and discretionaries, we got staples going up 0.86. This continues to look super bullish. Our price target has been 77.50 for a couple of days now. Seems like we're going to hit that probably tomorrow. And then discretionary is still hovering in this zone. Can't get above that 180.10 level. Interesting to see this going higher as Tesla continues to look quite weak. Did get back above the shorter term support. Interesting. Still couldn't get above that 55 EMA there at 179.12. So at resistance. And I really wouldn't do anything with this until we get either above that 180.10 or we start to see a bigger acceleration to the downside. If it breaks, 21 EMA sitting down there at 175.49. Moving over to financials and utilities. Both of these going much higher on the day. 0.75 and 1.52 on utilities. Absolutely massive. This has been a massive squeeze and it continues to run here straight up at this point, stacking candles on top of each other. Price target, same as yesterday, 71.83. Seems like it's going to get there tomorrow. And then financials did barely close above my 41.65 level. If it holds that, 42.22 is the next resistance. And momentum and RSI are both bullish on this. And these are absolutely the sectors that are holding up markets. Technology is not doing it. We saw the Mag 7 pulling back here today and the S&P's running, and the NASDAQ was basically flat on a day where we had utilities up 1.5%. Looking at the Tasty charts here for utilities on the weekly, you can see a low, higher low setup here from mid-February, and since then it's been basically straight up. We saw bullish conditions last week. Your ATR stops are down at the 60-64 area. Upper ATR is overthrown at this point, so that is an indicator this rally could be at least stalling in the short term. That resistance was at 70.02, and you can see the same thesis here on the daily chart. But we did see massive volume coming through on that buying pressure. Definitely overthrown. Upper ATR 69.91. ATR stop here at 67.71. It just continues to climb every single day. Still looks super bullish. And then jumping down to the hourly, you can see we continue to grind along those upper ATRs. So that is being relevant there. Upper ATR right now is at 71.31. So we're right in that zone. ATR support on the 1 hour would be 70.59. Moving over to breadth. Breadth continues to go higher as we expected. We had a bullish day yesterday. Really the last several days in a row have been bullish. Still waiting for a 20-day breadth to get to that 86.50 area. Then we'll see what happens from there. Momentum and RSI still bullish. And then we did get a stronger push here on the 50-day. We did have a slight down day yesterday, but now we closed above that 52.82 level. Now we have the 200 SMA, 56.28, and then above that I have 62.25. I do think this is probably going to push to that zone. And then if that breaks here, then we could start to push to these upper levels, 77.46 or 83.83, certainly possible. But right now, both of these look bullish. Moving over to the dollar, we did get an attempted breakout once again, and it was quickly rejected. You can see it here on the daily chart, hit that 21 EMA to the penny and then broke back down into this range. We said yesterday we expected it to break lower, and sure enough it did. Momentum back to bearish, RSI breaking lower. Trend support for tomorrow would be down around 104.77, and if it pushes to there, we should see equities going much higher over the next day or two. So right now, weakness in the dollar seems like it's set to go lower. It is worth noting here on the hourly chart, we still have a low with a higher low setup, but we did break this previous consolidation low, so do have to keep an eye on the different time frames. Ultimately we're above this previous low from the beginning of May, but it does seem like this is a structural break to the downside in my opinion. Moving over to yields, you can see the 2-year did sell off right to our support level, 4.8% right there at that zone. Momentum continues to roll to bullish, so currently at support, might see this swing up a little bit. And then looking at the 10-year, also a down day there. But now for the Friday session, you can see that momentum starting to roll back to bullish, currently still holding those same lows, still holding the highs here from 8 April. So nothing's really changed on yields, and I think this move down here today did give markets a little bit of a boost. And again, that's coming off of the back of that unemployment data. Moving over to bonds, you can see bonds did dip early in the session. J&K did come all the way down to 94.02, and then we bounced off the 9 EMA and started to roll back to bullish. Momentum didn't go with it, so this is still starting to look a little bit weaker, but we closed on the high, and it was a positive candle, so you do have to keep that in mind. We are above all the EMAs and SMAs as well. And then looking at TLT, we had the gap down, and it did gap down even more here today, but then it rallied all the way back, almost to the trend line. After hours, it's at the trend line. If it breaks that and holds, we could see a push up to this next level at that 55 EMA there, around 91.88, and then above that I have 92.82. Momentum and RSI are both bullish here on TLT. Moving over to volatility. Volatility has been doing basically what we thought it was going to do for the past several weeks. Kind of topped out and it went down here, and since then it's been basically straight down, and now we're at support. Last time we were here, it did take a couple of days before we found any kind of bounce. You can see even here we got there 3 days before we saw a bounce. A couple of these were a little bit quicker, 1 day down, 1 day up. So we'll continue to watch this at this zone. If the VIX starts to pick up, that could be an indicator of some bearishness to come. But right now we are at a complacency level and a potential support level for the VIX. Moving over to my accounts, I made a little bit of money here, just about $520 or so. So pretty good on the day. I was rolling up. I established more positions here on the IWM. You can see I put on some covered calls for a 205 for tomorrow. That's already in a small losing position. Max profit there is at 85 cents. And you can see we're already at 205.80. So pretty much already at max profit. That $48 will come in tomorrow if we stayed at current levels. But I can always roll that out to the Monday session and probably up and out a strike as long as it doesn't get too crazy on me. So in a good position there, looking to make some more money tomorrow. And then looking at my Qs positions, I went pretty aggressive here. 441 here, sold the puts at the money. 441.02 was the closing price. And then I rolled out those calls to the Monday session, 443. So up 50 cents, collected a small credit on that. So playing a little bit of defense, but I'm rolling that out. And then you can see I assumed a little bit more risk on that covered call. 437, I was able to roll that out in time and up 2 strikes for just a $5 debit. So that should be a good position there as well. $6 on that credit. Max profit there would be 443, so about $2 higher on those 200 shares. So that would be about a $400 profit on that position. And that's just to May 15th. So that's the Wednesday session of next week. So $400 over the next 4 trading days. So about $100 a day on that position. And then this put position that I continue to pull in credits on. Overall, pretty bullish across the markets. The finish was quite strong. We held some levels and everything looks good going into the Friday session. Let me know down in the comments section what you think of the jobs market or the most recent unemployment data. Is it going to impact the Fed, or is this just another blip on the radar? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.